am a licensed and I specialize in investment as well as wealth protection in the areas of life, health, and general insurance. Personally, I'm an advocate for personal financial wellness, including your insurance wellness, retirement planning, and estate legacy planning. So of course, this webinar is meant for education purpose, not meant for financial advice. So do reach out to, if you have a financial advisor, you can reach out to them. If not, maybe you can approach me as well or drop by Toa Payoh branch if you stay around here. Okay, here's an overview for today, the financial kueh lapis for youth. So an overview of the personal financial wellness, and I will serve you this financial kueh lapis strategy. And of course, give you some ideas for the investment and retirement planning solutions for you. If along the way you have any questions for me, you can drop in the Q&A panel. I will try to address your queries towards the end of the webinar. Okay, here I go. So in case you're not aware, we have this basic financial planning guide, which is developed by MAS, Monetary Authority of Singapore, and Money Sense. The guide was launched last year, October 2023. It's meant to provide guidance for your key and basic financial planning needs. So there are 4 pillars in this basic financial planning guide, which includes emergency fund, wealth protection, that is insurance, investment and retirement planning, which I will actually focusing more on today, and as well as legacy planning. So of course, here's an overview as well. Focus more on the investment and retirement planning as part of the topic today, the financial kueh lapis for you. So for the investment and investment portion, right? So basically, under this guide, right, is to invest at least 10% of your net income for your retirement and your financial goals. So for example, and this net salary after CPF deduction is around 5K. So he should invest 2K each month. So that is around 40% of his income. So the idea is you can set aside more than 10% of your net income if your budget allows. So it's to invest your excess cash and grow over time. So that is the idea of investment and for your retirement planning needs. So okay, later I will touch on more on the CPF and your retirement. So basically, what is your definition of retirement in Singapore, right? Is it to travel around the world? Maybe not in 80 days, maybe progress every few months. That is the very perfect situation, right? Or you want to pursue your hobbies because you are actually have been so busy in your corporate work life and your family life, then you want to take a step back and spend more time pursuing your hobbies, maybe craft work, etc., or simply exercise. Or you want to spend more time with your grandchildren to take care of them, to help your children as well. So what's your definition of retirement in Singapore? So, okay, also share with you this article in case, I'm not sure whether you read some books or maybe watch Netflix series. So I think recently I also watched this Netflix series on the Live to 100 Secrets of the Blue Zones. So what is this about, right? So basically I think most of you are aware of the secrets of living to age 100 years old. So basically, Okinawa in Japan is very famous because of their secrets, like their diet, their routine, things like this, or even connections. So surprisingly, in this Netflix series, Singapore is one of the Southeast Asian country also included in this so-called Netflix series. Surprisingly, yeah. So what's the idea, right? So basically, the concept is we are living longer. In fact, 84 years old or more. So it's good to keep yourself healthy and well connected to your close friends and family, your community, good health and good wealth. All right. So yeah, we're in the blue zone. Yes. Of course, next is okay. So retirement. What is retirement about? Is entirely about your choice, whether you choose whether to work or not, and what age. Right. So when you start your retirement planning early, then you are in a better position to make your decision. So some indicators to consider your retirement option, of course, is have a house to stay and fully paid off. And of course, free of your debt obligation. I mean, your house fully paid, your vehicle car all fully paid. And of course, most important is to have adequate insurance coverage for your medical expenses because of the high rising costs of the inflation as well and the medical inflation cost as well. Also for long-term care expenses, and also have your adequate savings and emergency fund, and also build passive income and grow your retirement nest egg to pay for your retirement lifestyle, your desired retirement lifestyle, as we mentioned just now. So you may have common doubts on your retirement planning journey, and that includes, so how much is exactly enough for your retirement? So this is one. Number two is what happens if you actually outlive your savings. So this is also known as longevity risk. That means your savings actually run out of savings. And we are also living longer, remember? Like more than 84 years old. So for me, I hope I can reach 88 years old, auspicious number. So with inflation, so your important question is your retirement fund, is it adequate to fund your retirement lifestyle? That's right. So of course, also brings us to another topic for retirement and re-employment age. So now currently our statutory retirement age is 63 years old. Of course, you are aware that progressively this retirement age will be increased from 63 to 64 come year 2026. And eventually, by the year 2030, the SRI, statutory retirement age will be increased to 65. And the re-employment age will also be increased to 70 by then. So of course, we know our government actually encourage us to continue to work if we can, and we enjoy the work. But of course, ultimately it's your choice, right? Of course, not forgetting the next factor which affect our retirement planning, that is inflation. So a quick look at the core inflation. So what is core inflation, right? So basically core inflation will exclude those fluctuating factors like private road transport, like taxi or Grab, or even accommodation costs. So based on the March CNA article, the core inflation in Singapore is around 3%. Okay, so that's for your reference. Okay, so you may have heard of this rule of 72 and the effects of inflation. No worries, I'll bring you through this concept. If let's say for the inflation just now I mentioned is 3%, right? So the cost of living, it will double every 24 years. How do I derive this 24, right? Basically it's 72 divided by the 3%. Okay, so 72 divided by 3, that means in 24 years, the cost of living will double at a inflation rate of 3%. Let's say the inflation rate will be increased to 4%, then it will be double even faster. So with inflation, what is the impact on your retirement funds? As you're aware, first, your retirement funds will not be adequate. So where do you fund? Is it you continue to work part-time, or maybe you can save more and grow your retirement funds more aggressively now, or you have to adjust your expenditure on your retirement lifestyle because there is a chance that you may outlive your savings if you take no action because of the inflation factor. Just to illustrate more, just like I mentioned about the rule of 32, for example, your annual cost of living, let's say, is 3K per month. That arrives to 36K per year, right? So remember the rule of 72 or the effects of inflation, it will be doubled, say 36K to 72K in 24 years. So given this amount, the amount that you require to retire is around 1.44 million. So just a ballpark figure for your reference. Depending on your retirement lifestyle, your desired retirement lifestyle, it may be more or less. If you want for a simple lifestyle, of course, maybe this range will be adequate. Okay, of course, you have a high-end lifestyle, so do incorporate more inflation rates or your retirement expenses to cope with your inflation. So of course, this survey study, right, we ask Singaporeans about their preferred retirement lifestyle. Okay, in case you can't read too small, basically there are three general lifestyle, A, B, and C. So maybe A-B, the lifestyle B is basically you'll stay in a HDB flat and sometimes you commute by transport or taxi or Grab, for example, and you see your medical consultation at your GP clinic or even government hospital, and you may or have a part-time maid, and you travel often in the regional countries. So typically, if your lifestyle is more of a retirement lifestyle B, for example, in today's dollar, it is around 3,003 per month. Okay. So basically, just a illustration of which one is your desired retirement lifestyle. Of course, if your retirement lifestyle is more of a high-end one, like let's say lifestyle C, if you actually own a high-end car, travel to Europe country, things like this, of course you need a higher retirement fund. So basically, retirement planning in Singapore, actually, basically, you have to consider these two factors, basically the financial and non-financial. So your lifestyle matters. Of course, as I mentioned, your preferred retirement age. Is it to retire tomorrow or retire at age 55 or 65 or even 70, for example? And your desired retirement lifestyle, as illustrated in the previous slides. And your accommodation, where do you stay your retirement years? And your well-being is important. So stay connected. Social, your community, physical and emotional, stay strong. And not forgetting your health. What health is well, right? And of course, other matters like your lasting power of attorney and the advanced medical directive will be this chunk. Of course, the other part will be the financial matters, as what I mentioned earlier on, your retirement lifestyle and where do you fund your retirement expenses, right? And of course, when it comes to a stage that before we pass on, how do you want to distribute your legacy or estate to your loved ones? So remember to do your CPF nomination as well as making a will. Okay. So basically, there are two ways to estimate your income. Two ways to estimate your retirement fund needs, right? So basically, the first one is income replacement method, and the other one is expense method. Illustration. So the income replacement ratio method, it comes with, let's say most people, they will spend less on certain expenses during their retirement. So as a guide, aim for 75% of your income to live comfortably. So illustration, say, and this income is 15K per month, so that around is 180K per year. So his annual retirement income will be 75% of it will be 135,000. So let's say he want to retire at the age of 65, and for the next 20 years to retirement in style. So all in all, the ballpark retirement income required for, and this case will be 2.7 million based on the income replacement ratio method. So if I look at the expense method, which is my preferred method because you actually review and based on your current level of expenses and you compound yearly to your retirement age with the inflation rate like 3 or 4% per year. So the expense method it allows you to review your current lifestyle or spending habits before and during your retirement so that you just spend on the essential expenses. Of course, once in a while, it's good to pamper yourself, like nice travel or nice food, right? So illustration, June's annual expenses is say 10K per month. So that amounts to 120K per year. So June, she wants to retire at age 65 and to enjoy her golden years, 20 years. So for June's case, she will need around 2.4 million for her retirement fund. Okay. So of course, for either method, please build in the inflation rate. Okay. So now we will move on to are you on track to reach your retirement goal? So basically 3 key steps. So here your retirement goal, and here you are now. Basically, it is to draw up your retirement plan. Step 1, define your retirement goal. That is, at what age do you plan to retire, and how much is your retirement nest egg? And step 2 is assess your current situation. Where are you now? As in, and how are you closing your retirement savings gap from here to your retirement goal? And most importantly is what financial vehicles are you taking to reach your retirement goal? Are you staying put and doing nothing? Or you're actually cycling leisurely or aggressively to your destination? Or maybe you're taking some private hire taxi cab. I mean, just an analogy to reach your goal. Or you're taking a plane to escalate your financial vehicles to reach your retirement goal, or all of the above. Okay, so importantly is you can take a step back to look at yourself, your retirement planning journey. Where are you now? Okay, then take some steps progressively to reach your retirement goal. So for me, I also on my way. Okay, so yeah, of course for me is I live a very simple lifestyle. Like what the earlier illustration. Yeah, so I'm taking my steps to close the retirement savings gap. So basically, here are the financial kueh lapis strategy for you. Of course, CPF Life is our base to provide you with the lifelong monthly income. Of course, CPF Life is mainly for Singapore citizens and PR only. Next is to your insurance and wealth protection. Important to look at the adequacy of your protection plan, your term life or whole life policy, and your health insurance, that is your MediShield Life or Integrated Shield plan. If you don't have, please level up. And long-term care, that is your ElderShield or CareShield Life plan and supplement, please level up. If it's good to level up, okay, because you can use MediSave, use MediSave to cover your insurance premium. And of course, if you have excess budget, okay, also consider income plan like savings and endowment. We have single premium endowment plan or regular premium endowment plan, or even build another layer of retirement annuity to supplement your CPF Life, which I will cover on later. Not forgetting SRS, Supplementary Retirement Scheme. This is a very powerful tax planning tool that will help you reduce your yearly tax bill. And if this helps you, then invest your SRS. You contribute your SRS each year. Invest your SRS plan and don't just leave it in the bank earning 0.05 interest rate. Invest it in various instruments. If you're not sure, reach out to me as well to build your retirement fund. Okay. Next, of course, investment collectively to build your passive income and for grow your wealth over time. To get for capital appreciation, various instruments here, bonds, it can be savings bond or the corporate bonds or bond funds, things like this, or shares or equities, or even funds, unit trusts, like global equity fund, global balance fund for diversification. So invest with your excess cash, SRS and CPF investment scheme, which I'll touch on later on. Of course, lastly is for emergency and investment opportunity, please build your emergency fund. You can have it in your cash at bank, SSB, or even money market fund, a popular instrument as well. 6 months worth of expenditure as your emergency fund. Okay, so basically here I'm serving you this financial kueh lapis strategy for you. Hope this is helpful for you. So of course the CPF Life or CPF instrument is the most fundamental one, having a fully paid out home. Okay, and of course insurance and saving, which I mentioned earlier on. That means your MediShield Life, your Integrated Shield plan for your healthcare, hospitalization insurance, and as well as the long-term care expenses and MediSave account as well. Of course, the last one will be from age 65 onwards, you will have your CPF Life, okay, which give you a monthly payout for a lifetime as long as you are around. Okay, so stay healthy and get the money each month. Okay, from 65 onwards. Of course, you can defer lah. Huh? So a summary of our CPF accounts, if you're not familiar, I'll just touch on very fast the key points. Of course, most of us are under 55 years old, not yet 55 years old, right? You have OA, SA, and MediSave account, correct? For OA, SA, the base interest rate is 2.5% per annum and 4% per annum respectively. My view is, of course, SA leave it compound over the years, okay? Very good enough. For OA, you can consider to invest your excess OA because the base interest rate 2.5% is easier to beat with some instrument. Okay, of course I'm not asking you to park all your OA excess OA to some instrument. You can park some money in your OA, earning the risk-free 2.5%. Of course, if you have excess, do consider to invest the excess. Do reach out to me if you're keen on this one. Okay, so CPF investment account. Of course, MediSave account, the base interest rate 4%, basically used for your medical expenses and pay for your insurance for your MediShield Life, etc., or CareShield Life. Retirement account will be created when you reach your age 55. Of course, they will extract the money, CPF board will extract money from your SA first, followed by OA in that sequence up to your cohorts. FRS, full retirement sum. So for this year, the FRS is $205,800. So back to RA. So from age 55 to 65, that is the accumulation period. After which, from age 65, you're on board the CPF Life. Then you can choose whether you want to start your CPF Life monthly payout from age 65 or defer up to 70 years old. So basically, CPF Life is the National Longevity Insurance Annuity Scheme administered by our Singapore government. Okay. Okay, so a summary of the financial kueh lapis for you. Okay, of course, top up your CPF savings to build out your larger nest egg. You can do a cash top up or transfer OA to SA or RA respectively. And of course, CPF Life provides you for monthly income as long as you live. So if you opt to defer your payout later, say to age 70, for example, you receive a higher monthly retirement income. SRS, remember to invest and grow your SRS, okay, progressively. So remember, cash savings and emergency fund, conserve at least 6 months of your monthly expenditure, then invest the rest. So comes to investment, because your investment goal is to have passive income like dividend and interest, and to have a capital gain after all, right? Invest with your excess cash, SRS, and CPF, OA in my context. And if not enough, you can build another layer of equivalent of a CPF Life. That is through the private retirement annuity plan, which I'll cover on later, to have an additional money income as shown here. Otherwise, you can also explore other incomes. Maybe you have extra property, good, then have a rental income. Then you also have, or maybe you can consider to right size your house, or things like this. Of course, if you're still healthy and enjoy your work, choose to work part-time, right? And contribute back to society and also align to our Singapore government's initiative, right? So of course, just to take note, clear any outstanding loan and liabilities before your retirement age, okay? Like property loan, vehicle loan, and consider your family and dependents goal, okay? Remember to get your personal accident plan just in case something happens. At least there's a coverage there. And upgrade your MediShield Life and CashShield Life supplement with a supplement. Okay, if you do not have anyone, because if you don't have, you have to fund from into your retirement funds, right? Okay, so part one will be how to build your investment fund, right? So basically, I will look at your investment profile. Okay, so how to build your investment? Typically, I'll look at your investment profile, which includes what's your investment goal, investment time horizon, as well as risk preference. So when it comes to investment goal, which one is your investment goal? Is it to preserve capital, or to grow your capital, or to have passive income, or simply FIRE? FIRE is more of the millennials initiative that is financial independence and retire early. So typically when I ask my friends and clients, right, they'll say all the above. I agree that, because I also hope so to achieve all at one go. But of course, typically, if you want to grow your capital, you also want to preserve your capital, right? Right. So nothing wrong with that. So we will we'll build some instruments to help you achieve. But of course, investment time horizon is important as well. Okay, because I can't perform magic overnight, because you have to let your investment grow, depending on which financial vehicles you are taking. So of course, if your investment time horizon can be at least medium to long term, you have more time to ride through the market volatility. As well, you can see the past few years, COVID, things like this, and we are very bullish since last year. Yeah. And risk preference, typically low, medium, and high risk preference. So let me go to the next slide. So typically when I ask my friends and newly met clients at the branch, and so when they share with me, they have some stocks or shares in their portfolio. Okay, so actually to me, their risk preference is around this zone really. But doesn't mean, okay, that your high risk preference doesn't mean you need to chunk all the high risk solutions. In fact, myself, I am also high risk, I can take high risk because investment horizon is medium to long term. Then actually, in fact, I don't really start from here. I also start gradually. many years ago from 6D, then slowly with SSB. Then my risk appetite actually grown because I also educate myself. Okay, so of course I'm in this line, then I have more experience in this. I also slowly move into ETF, then stocks, all this. So with a high risk preference, in fact, you can have more solutions in your investment portfolio. Don't you agree? So nothing wrong if you actually you prefer instruments like this, because that means your your investment goal is more to preserve your capital and has passive income. Nothing wrong with that. Okay. So but let's say along the way, your risk preference are actually increased over the years because you are more educated and you're more experienced, then you can actually include more instruments or the financial vehicles to reach your retirement goal for capital appreciation, passive income. Okay. So of course, you want some moderation. If you're a high risk investor, let's take a look whether you are here. Let's say high risk investor. It means typically you're knowledgeable. You're less concerned about the short-term fluctuation because you know that you are in invested for medium long-term. Durations are the appointment horizon. Okay, at least medium long-term. And of course, what is in your basket is shares and risk. Also, risk is real estate investment trust. Also, stocks out there listed on the exchange or even equity funds. Okay. So just to give you an idea. So my key investment strategy is always this D&D, of course not dividend dance. So I introduce dollar cost averaging and diversification. Of course, what is DCA, right? The idea is to make regular investment in the market over time. So what are the key benefits for you? That means you stay invested throughout the market. I mean, when market drops, you buy more units. And market increase, recover, you buy less unit. And the best thing is it removes the emotional investing in you. And over time, it will lower your average cost of investment. So that's DCA. The other D is, I cannot overemphasize because this is very important, diversification. Let's say your current investment portfolio is mainly maybe 99% or 100% in stocks, individual stocks. Actually, that presents a very high risk. It's good to diversify your investment portfolio by having some other instrument in negatively correlated, that means move in opposite direction. Example, equities and bonds. Okay, so the bonds you can, of course, you can actually sum up in and take in our SSB T-bill. Yes, that return SSB is like 2.93%. Now, actually, it's very decent and give you a better return than leaving your assets funds in your cash bank. So have some government bonds or some bond funds, for example, or even some exchange traded fund or even index fund. Okay, so basically, this is diversification. So next is how to invest and grow your wealth. So along the way, I think you got my point. Basically, these three sources of fund: cash, CPF investment scheme, and SRS. So add cash, right? So maintain your emergency fund at least 6 months of your monthly expenditure. So your SS fund, please invest and to get a better return. So we can do it through instruments like Singapore Savings Bond, Treasury Bill, as well as Money Market Fund, MMF, which is very popular since past one year or two. Because we are operating on high interest rate environment, we should ride on the interest rate wave. Yeah. And you can also consider single payment endowment plan. Okay. Typically you put a single payment 10K or 20K with the insurer just for 2 years. When it's up, you can get your capital guaranteed and return of 3.x% per annum. Next is CPF investment scheme. As you know, basically is to allow you can invest your assets CPF OA and SA, as I mentioned earlier on. So for your CPF OA, set aside minimum of 20K. SA set aside minimum of 40K. So if you are new to CPF investment scheme and you are keen to start on this one, no worries, can reach out to me. I will give you some guidance on this one. But basically the idea is you can log in your CPF apps, right? You have to do some tutorials first. If not, you can just do the SAQ, self-awareness questionnaire, 20 question FAQ. Take and pass the test with log in your SingPass. Then once you take and pass already, then you can open your CPF investment account with one of the agent bank here. Okay, reach out to me if you're keen and not very sure on this one. So basically, what can you invest your OA in? Okay, I will not mention about SA because SA like compound at 4%. So for CPF OA, you can invest in a unit trust or funds. If you're keen, I have some resilient funds in my portfolio. You can also invest your CPF OA in Singapore stocks and equities. Next is SRS, Supplementary Retirement Scheme. It's a powerful tax planning tool. So if you are paying tax to our tax authority, quite a big sum each year, please consider SRS in your tax planning. If you're not sure how to do it on this one, reach out to me as well. I can guide you as well. So for SRS, it's the bank account. You can open, no retake test. You can just open the bank account with one of the agent bank. You can only have one bank account, SRS bank account. So as mentioned, it's part of your annual tax planning, and it helps you. If it helps you to review your tax payable each year, contribute your SRS each year. Okay. Then next is to invest your SRS contribution each year in various instruments, including T-bill and unit trust, etc. Okay. So next, I'll go on to another ideas and solutions that is to supplement your CPF life. You can consider private retirement annuity plans. So what is this annuity plan? It functions like CPF life. In fact, CPF life, if you log into your CPF life estimator, you may also find that maybe the CPF life money paid out estimated amount may not be enough. So you can consider this RAP, retirement annuity plan. It is designed to supplement your CPF life and to provide you with additional monthly income when you retire. So typically is you can choose your payout duration either for fixed period of years or the rest of your life. Later I'll have an illustration on that. And how do you fund your annuity plan? You can, depending on resources, you can choose to do single premium, demo one lump sum, or you can do regular premium. Typically annual or monthly premium. But next is here are the key considerations for the private retirement annuity plan is, let's say you have your preferred retirement age, is it like 65 or 70, for example, and how long you want to receive your monthly income. That is the payout period. And what is your preferred amount of monthly income? Later I'll show you the illustration. And your premium payment period, a single premium or regular premium. And your premium payment mode typically is cash and or SRS, sorry. And there's an accumulation period. It functions like the CPF, like remember the age 55 and age 55 to age 55, that is the 10 years of accumulation period. So for private annuity plan, they also have this accumulation period. And typically the insurers, they also provide additional benefits like this few. And there are also no medical underwriting, no health checkup required. So illustration, Andy again. Andy, let's say his age 50, okay, let's say this year he's age 55. So he wants to level up and supplement his CPR life, but not enough, right? So he actually go into this retirement annuity plan with an insurer. So he can choose to pay single premium or a regular premium, say over 5 years. Then he can choose his accumulation period, say 5 years or 10 years. Okay. So let's say he also choose his payout period, say over next 20 years to receive monthly payout, say 1K per month. So this is a simple illustration of a typical private retirement annuity plan. Of course, this one is still insurance. So insurance, right, here are the key considerations. Your financial situation, that is your cash flow, your outstanding loan and budget. Also consider your family and dependents and the coverage or the requirement you required. And of course, the affordability because it's for long-term commitment. Okay, so a summary of the financial kueh lapis strategy for you. CPF Life to give you a lifelong income. Important to have adequate insurance coverage for yourself. Remember SRS, include this in your tax planning tool and reduce your tax bill each year. Then invest your SRS fund to build a retirement fund. Investment, in your excess cash, SRS or CPF 08 for this case, and for a passive income and to grow your wealth over time. And of course, important to have an emergency fund, also for liquidity and for investment opportunity. So with this, I actually end of this webinar. So good to take action to build a retirement fund. Remember the cycling or taking a plane thing. So connect with me today. You can scan this QR code shown on this screen to connect with me today. You can reach me via WhatsApp. Alternatively, you can email me at my email address here, or if you want to meet me face to face, yeah, you can reach out to me and just come by to Bio branch. I'll be here also. Okay, so in the meantime, let me take a look whether there's any questions to address. Yeah, so there is a question. Yeah, the CPF SA no more existing. Yeah, so the CPF, yes, as mentioned, Mr. Desmond, right? Yeah, yes. The CPF SA as announced in this year's budget, right? Yeah, so the next, okay, actually more details will be out second half of this year. But of course, we know that the key point is when you reach the age 55 or more, right, then your SA account will be closed. Then your balances will be transferred to the retirement account. And if it has reached the year's FRS, right, the remaining amount will be spilled over to your OA, or you can choose to build your retirement account up to enhanced retirement sum. So that is the key points from this year's budget announcement in February. So of course, a lot of details will be more will be fulfilled and provided in the second half of the year as provided by the government, because then I think it might also affect my view, it might also affect some of the CPF investment rules. Yeah. So like what I mentioned earlier just now, I always advocate invest your excess CPF OA if you have access, because 2.5% interest rate is easier to beat. And I do have some instruments, funds, for example, which actually outperform this 2.5%. Okay, of course, it's still investment. It comes with risk. Of course, I have done my homework. And I also personally invest my OA, access OA in those funds. Of course, I also invest in my own money in stocks, Singapore stocks or overseas stocks. But personally, I prefer Singapore stocks, right? I hold in my CDP for cost reason, more cost efficient. For overseas stock, right? Okay, I prefer to do it through funds, okay, because of the lower cost and more diversification and hassle-free to manage. So I hope I have addressed your concern. Yeah. Okay, so there is another question on, please show the slide for, I suppose, is the retirement. Okay, let me go back to the slides. Okay, so there's a question on expense method, right? Pardon me, okay, I think you meant this slide, right? Let me see. Basically, right? Yeah. Yeah, basically this one is the high-level ballpark method. Of course, the details I will have some Excel kit at my end. If you're keen, also reach out to me. Yeah. But on a high level, these are the two methods in the available. Okay, you can easily Google the information, but just to give you illustration and idea, income replacement and the expense method. So as I mentioned earlier, for me, I personally prefer the expense method because it allows you to take stock of your current level of expenses and review your spending habits before or even during your retirement. So here are the slides. Yeah, basically, I think you are referring to this one. So basically, it's to give you an idea, okay, how much your yearly spending is, then how long you retirement, 20 years or 30 years, then just a ballpark figure of 2.4 million for June's case, for example. So if this is okay, I'll any other questions for me? Yeah, I hope you find this session helpful for you. Let me go to the summary slide. So important to ask yourself whether you are on your track to reach your retirement goal. So actually, interestingly, I have met some very clients. Yeah. So in fact, like they are early 50s and they are actually semi-retired or even fully retired. So of course, the secret to them, to their strategy is they actually started, okay, they work very hard in their younger years, and that allows them to reach their retirement goal, like mid 50s, they're about, yeah. So very interesting cases, yeah. Because I always like to ask about their retirement lifestyle, and hope to also learn from them also, yeah. Of course, every retirement planning needs is very individual and personalized. This one is just a very general one. So of course, if you are keen to start on this one and a bit lost, no worries. You can always drop by a branch or give me a call. So I just go faster to show the slides now. Pardon me, so that you can reach me. Okay, here's the summary of the financial kueh lapis for you. Yeah, here's the last slide. So basically is to connect with me today if you have some questions or concerns, or even you want to kickstart to build or review your retirement funds. Yeah, feel free to reach out to me and connect with me today. Okay, here's my number. You can scan this QR code. I will do my best to reach out to you. So in the meantime, I will stay on this slide first. The time is 1:45 p.m. Yeah, I'll be here until maybe 1:50. So feel free to drop me your questions if there's any. If not, you can reach out to me separately. Thank you. Yeah, thanks for staying with me. Yeah, so in the meantime, if there's any more questions, I'll be here until 1:50 p.m. Yes. So hope you have a good lunch, and hope this session is useful for you. Simple dessert, financial kueh lapis, although it's not an edible one, but I'm sure you find some thoughts or ideas that is useful for you. Feel free to reach out to me and share your thoughts on my webinar and content, and maybe what are the other contents that you would like me to cover. I'll do my best to curate some content. Yeah, so yeah, I'll be here until another 3 minutes. Yeah, so feel free to reach out to me, email me, come by the branch at Toa Payoh, or simply WhatsApp with me. Yeah, I'll be here. Hi, I'm back again. So, yeah, thanks for staying with me. Hope you enjoy this webinar and the financial kueh lapis strategy for you. Feel free to reach out to me. Here's my number. Connect with me today. Here's my WhatsApp number. Or alternatively, you can email me. Okay, so if there is no further question, which I don't see any, I shall end this webinar in 5 seconds. So I'll see you soon. Uh, yeah, so this Friday, I also have a seminar at Toa Payoh branch. If you are available and you maybe you can come by Toa Payoh branch, register for the my seminar. It's my maiden seminar, so hope you get your support as well. I forgot to publicize just now. So hope you can register for my seminar. The topic is VIT strategies, budgeting, investment, and tax planning. So I will elaborate more on this seminar at on this Friday at Toa Payoh branch. Feel free to register. The cost is free. Okay. So if you're here, maybe I can buy some kueh lapis for you as well. So see you soon. Okay, hope to see you soon. Okay. So I shall end this webinar. Thank you. Bye bye.